The US dollar stands as a pillar of the global economy. It's the currency we use every day, but its future is uncertain. Concerns are growing about its stability. Some experts warn of a potential decline. This shift could reshape the world as we know it. Understanding the forces at play is crucial for everyone. The US dollar's dominance isn't new. It's deeply intertwined with the global financial system. But recent events have exposed vulnerabilities. Shifts in geopolitical alliances are raising red flags. New economic powers are emerging. These changes are prompting a closer look at the dollar's future. The concept of a petrodollar is central to this discussion. It represents the agreement that oil, the world's most traded commodity, is priced in US dollars. This agreement has underpinned the dollar's strength for decades. But this foundation is showing cracks. The rise of alternative currencies adds another layer of complexity. Digital currencies like Bitcoin are gaining traction. Some nations are exploring their own digital versions. This evolution in finance could challenge the dollar's dominance. The path forward is uncertain, but one thing is clear. We're entering a new era in global finance. The petrodollar system emerged in the 1970s. After the US abandoned the gold standard, it needed a new way to maintain the dollar's value. Oil became the solution. The US struck a deal with Saudi Arabia, the world's largest oil producer. Saudi Arabia agreed to price its oil exclusively in US dollars. This agreement had far-reaching consequences. It created a massive demand for US dollars. Countries needed dollars to buy oil, propping up the US economy. This system cemented the dollar's status as the world's reserve currency. It also gave the US significant geopolitical leverage. However, this system is now under strain. Saudi Arabia has shown signs of moving away from its dollar-centric approach. It recently joined BRICS, a group of nations seeking to diminish reliance on the US dollar. This move signals a potential shift in global power dynamics. The rise of de-dollarization further threatens the petrodollar system. Countries are increasingly looking for alternatives to the US dollar in international trade. They're using other currencies and exploring new payment systems. This trend could erode the dollar's dominance. The future of the petrodollar is uncertain, but its decline could have significant implications for the US and the global economy. De-dollarization, the process of reducing reliance on the US dollar, is gaining momentum. It's driven by a desire for a more multipolar world. Countries are increasingly wary of the dollar's influence. They want to reduce their vulnerability to US economic policies. Several factors are fueling this trend. One concern is the weaponization of the dollar through sanctions. The US has increasingly used sanctions as a foreign policy tool. This tactic has made some countries wary of relying too heavily on the dollar. Another driver is the emergence of new economic powerhouses. China, in particular, is challenging the US's economic dominance. It's promoting the use of its own currency, the yuan, in international trade. This shift could diminish the dollar's global role. The rise of central bank digital currencies, or CBDCs, adds another layer to the de-dollarization trend. CBDCs are digital versions of national currencies issued by central banks. They offer potential advantages over traditional payment systems, potentially reducing reliance on the US dollar. De-dollarization is a complex issue with far-reaching implications. It's a gradual process, but its impact is already being felt. The global financial system is evolving, and the dollar's dominance is no longer assured. Section 4. Economic warning signs: debt, inflation, and hyperinflation. The U.S. economy is facing several challenges. National debt has soared to unprecedented levels. Inflation remains stubbornly high, eroding purchasing power. Some experts warn of a potential hyperinflationary spiral. These economic warning signs are intertwined with the fate of the U.S. dollar. The U.S. government has been running massive budget deficits for years. This spending has led to a ballooning national debt. As the debt grows, so does the cost of servicing it. This burden can strain the economy and weaken the dollar. Inflation is another major concern. The prices of goods and services have been rising steadily. This increase is driven by several factors, including supply chain disruptions, increased demand, and government spending. Inflation erodes the value of the dollar, making it more expensive to buy the same goods and services. Hyperinflation, a rapid and uncontrollable rise in prices, is a worst-case scenario. While it's not an immediate threat, some experts believe it's a possibility if current trends continue. Hyperinflation would devastate the economy and render the dollar practically worthless. These economic challenges are complex and interconnected. Addressing them requires careful policy decisions and a focus on long-term sustainability. The health of the U.S. economy is closely tied to the strength of the dollar, and both face an uncertain future. Section 5. Safeguarding your wealth. Is silver the answer? In times of economic uncertainty, people often look for ways to protect their wealth. Some turn to precious metals like gold and silver. Silver in particular has a long history as a store of value. But is it a reliable hedge against inflation and a declining dollar? Silver has traditionally been seen as a safe haven asset. It tends to hold its value during economic downturns. This stability makes it an attractive option for investors seeking to diversify their portfolios and hedge against risk. One of silver's key advantages is its dual role. It's both a precious metal and an industrial metal. This duality means that demand for silver comes from both investors and industrial users. This diverse demand can provide support for silver prices even during economic slowdowns. Furthermore, silver is often seen as a more affordable alternative to gold. Its lower price point makes it accessible to a wider range of investors. This accessibility can be particularly appealing during times of economic uncertainty when people are looking for ways to protect their savings. However, it's important to remember that all investments carry risks. Silver prices can be volatile, and there's no guarantee that it will always serve as an effective hedge against inflation or a declining dollar. It's crucial to conduct thorough research and consult with a financial advisor before making any investment decisions. Section 6. A New World Order. Global Economic Impacts. The potential decline of the U.S. dollar and the rise of alternative currencies could reshape the global economic order. We might be witnessing a shift away from a U.S.-centric system towards a more multipolar world. This transition could bring both challenges and opportunities. One significant impact could be a redistribution of economic power. The U.S. has long benefited from the dollar's dominance. This advantage could diminish as other currencies gain prominence. Emerging economies like China could see their influence grow. Global trade patterns could also shift. If the dollar is no longer the primary currency for international transactions, we might see a more fragmented trading system. Countries might form regional trading blocs based on shared currencies or payment systems. The financial system itself is likely to undergo major changes. The SWIFT system, which currently dominates international payments, could face competition from alternatives. Digital currencies and blockchain technology could play a more significant role in cross-border transactions. This new world order presents both opportunities and challenges. It could lead to a more balanced and equitable global economy. However, it could also increase uncertainty and volatility. Navigating this evolving landscape will require adaptability, cooperation, and a willingness to embrace change. The future of the global economy is being written, and the U.S. dollar's role in that future remains to be seen.